Hi, this is a short video to tell you about the case study. You're now organized in groups. Hopefully your groups are already meeting, and hopefully you've already downloaded the financial statements for the company that you're working on. Please, when you download the financial statements, download the latest available financial statements. So for many of you, this will be the 2014 financial year ended 30th of June or later in 2014. There will be no 2015 financial statements available until about August or September. Now let me just tell you about what we're expecting briefly in this assignment. Remember that this assignment is an accounting assignment, and remember the basics, the basic angles that we're taking in this subject. We're talking about accounting regulation. So this case study will test your knowledge and allow you to demonstrate your knowledge of the regulations concerning the key accounting issues that your company has. This is also about incentives, and as we go through the points today, you'll notice that we actually want you to talk about accounting strategy. We want you to tell us what the managers of this company, of your company, are trying to do. What story are they trying to tell with their financial numbers, and what are they trying to achieve? What are likely to be the incentives behind that? So let's just quickly go into what we're expecting. Now, if you haven't looked, you should by now look. Towards the end of the outline, there are requirements of the case study. So this is a copy of the page that I just took a screen cap of a few minutes ago. Let's come into the 8 key components that we want you to look at. So these are the key components that are listed here as issues that you're required to address. Now, how you address those issues is up to you. You can structure your case study clearly, talking about each issue separately, or what I've found in the past is some groups have actually looked at some of these components together. So one of the most common ways of approaching the assignment that I've seen, other than the straight 1, 2, 3, 4, 5, 6, 7, 8, has been that some groups have looked at items 2 and 3 together. So they've identified key accounting policies, and then for each policy they've talked about the standards and rules and the flexibility management has, and then they went on to the next policy. And that actually makes some sense. Okay, so let's look at the points that we want. Firstly, we want you to tell us about the company. We don't want you to spend too much time or too many words on this. We just want to know what the company does so we have a feeling for its industry, and is it expanding, is it doing anything else? What's this company about? The second point is a fundamental point that you can't proceed without. To identify the key accounting policies relevant to the company's success or lack of it. What does that mean? That basically means we want you to tell us what accounting issues are significant for this company. Now, the most obvious way of looking at that is looking at the balance sheet and the income statement, and perhaps the cash flow statement, but mainly the balance sheet and the income statement, and looking at what numbers are significant, are big. If this company has got property, plant, and equipment that's 60% of its total assets, then how it accounts for property, plant, and equipment will be a key accounting policy. And so revaluation, impairment will be key accounting policies. So generally, a lot of people tend to justify accounting policies based on size, but it need not be size. You might look at your company, you could compare to another company in the industry, and you could say, look, everybody else has got property, plant, and equipment of 40%. This company's got 15%. What are they doing that's different? Is there a manipulation? Are they exploiting some rules? So, or you could look at variability. Are there numbers in their financial statements that change a lot from year to year? Okay, so these things will help you identify what the key accounting policies are. You have to do this before you can go on to the further points. You can't talk about accounting strategies. You can't talk about rules unless you know which policies you're talking about. So I know some people have a tendency to split up the assignment into pieces and say, right, you do 1 and 2, you do 3, 4, and 5, you do. That's hard because you can't do 3 unless 2 has already been done. Every member of the group must own every part of the assignment. When we see assignments that are glued together from people who have worked separately, we see that, and those assignments tend to do worse. Okay, so you've identified the key accounting policies. Tell us what accounting standards, what accounting rules apply. And I think that's pretty straightforward. If the key issues are ones we have taught in class, then you know exactly which ones. If the key accounting policies are something else, you have to look at the AASB standards. So go to www.aasb.gov.au, have a look at the accounting standards there, and see if any are relevant to the numbers that are key in your company. Okay, now the key components of the assignment. This is where you're likely to get the most of the marks. Once you've identified the accounting standards and the accounting policies, we want you to assess what flexibility management have with these accounting policies. So how much choice, how much subjectivity do they have? If you're using accounting to manipulate the picture of the company or to show your company in a particular way, your ability to do that is going to be a function of the amount of choice that these accounting standards give you. Now, those choices may be of two sorts. The standard may explicitly use choices. So it might say you've got to use method A or method B. Or you might have 5 methods you can choose from. Even if there's only one method, but even if there are more, within any choice, there are still subjective judgments that can be made. So a company might be able to estimate depreciation differently. It might have more flexibility in estimating recoverable amount or depreciation, and so forth. So how do you assess flexibility? Look, what most people have done in the past is said, look, for this policy it's high, for this policy it's medium, for this policy it's low. The next thing we want you to do is look at accounting strategy. Now, let me underline here, we are talking about accounting strategy. This is an accounting subject with an accounting assignment. We're not talking about business strategy. We don't want you to say that this company is trying to reduce costs to become more efficient, or it's trying to expand into Vietnam. That's business strategy. What accounting strategy have they got? What accounting choices are they making? And what incentives are likely to be behind those accounting choices? What's motivating them to present the numbers that they're likely to present? And we've talked about incentives. We've talked about the conflict between debtors and the company, the debt asset ratio, the times interest earned ratio. We've talked about the fact that managers are rewarded by based on profit, implicitly or explicitly. We've also talked about the fact that some companies, subject to political pressure, actually have incentives to show a lower profit. So those are the sort of things we're looking for there. The next thing involves quality of disclosure. So I guess you can look at two things there. One is, are they disclosing everything that is required in the standard? Okay, please don't say, yes, they are, because the auditors signed the document, signed the financial statement, signed the report. Look, you can do exactly what the standards require and still not provide a genuine picture. The standards might require you to disclose certain things, but you might disclose them in a meaningless way. Alternatively, you can provide information that is very useful for people to assess what this company is doing with its accounting methods. So when you're assessing the quality of the disclosure, don't just say, it's okay, the auditors have signed it. That's not a good response. Does your company disclose any additional information that it's not required to? So does it flesh out the accounting choices and information that it's required to present by giving you more details? So that's how you assess quality of disclosure. Potential accounting numbers, potentially questionable accounting numbers, what we would like you to look at there is, if you see that these guys have got flexibility and you think they're making particular choices, do you think they've made any choices that, for example, have been made in order to increase profit rather than because they want to accurately or fairly reflect what's going on? Now this is actually hard. It's hard to know what potentially questionable accounting numbers are. Maybe what you should do is look at this year's financial statements, compare them to last year's, or compare them to other companies in the industry. Are there any numbers or ratios that look different? Okay, so are there anything that basically looks weird? Okay, so those are the key things where you'll get most of the marks. Now, item 7, we're asking you to undo possible distortions where possible. So if you've seen some potentially questionable accounting numbers, maybe there's enough information in the financial statements to say, hey, if they didn't measure it this way, here's what the numbers would look like. In many cases, that's going to be hard to find. So what we would like you to do, if you can't find that information, is speculate. Say, look, here's how we think they've recorded something, but here's an alternative choice. If they recorded it this different way, perhaps you could demonstrate with journal entries. What would be the effect on the financial statements, on debt asset ratios, on profitability, that sort of stuff. And lastly, summarize any financial press discussion. What we would like you to do there is look at least 2 bits of news about your company, hopefully fairly recent, within the last year or 2. Please try to look at things from newspapers or financial magazines. Try to avoid press releases or announcements that the company has made to the stock exchange, securities exchange. But if you can't find any articles in the press, use Factiva in the library, Factiva. That basically allows you to search news sources. Google News is your friend as well. So, and to be honest, the financial press discussion is not something that's very important. We want you to look at it because we want to know that you have an understanding of what this company is doing. So hopefully this guidance has been useful in getting you started on the project, and I'm looking forward to a lot of good presentations in the final week. Good luck.